28th February 2023, Tuesday. Today is the final day for the month of February. We're going to see March very soon. And be honest with you, the March month itself is a seasonal pattern for downside. Okay, guys? So be very careful with this. And that's why I put Papa Bear reading the Wall Street Journal and telling you this, guys, this is a must watch because I believe the Dow Jones is heading south and the number is 31,342 in 3 weeks time, and I have done the mathematics for you. So let's just watch this and you will love this video, and please like and share and forward to all your friends. Now once again, disclaimer apply as usual, and make sure that you do your risk assessment, and thank you AIMS for the kind sponsorship. Now first of all, let me show you our our Hang Seng trading first. Alright, there's a bit of technical error here. Let me just do it for here, bring it away. Okay, so you can see that Hang Seng was trading up this morning. Very nice. We had a very nice run. And of course, what we did was that we called for a buy, as you can see. So we bought right here and let it run all the way up. And incredibly, you can see the market tipped the KTR3 perfectly, alright, as if that they know that all these lines are all drawn by my system, okay? And after that, right, the price came back down and it stopped at the opening price and rebounded again, and we went for the long one more time. And of course, because of that, we profited again about 200 to 300 US dollars. Now, we have been able to do this for quite a while, meaning that almost daily, it's almost not every time, but almost every week or so we end positive, and almost every day there'll be some profit. Of course, there's some losses of 100 days, but overall, we do make money. So guys, if you like this, if you want to know more about this TWB system, contact us through Facebook. We will come back to you. Alright. Okay, so let's recap what happened last night. The Dow Jones recovered 72 points, Nasdaq up by 88, and S&P up by 12, and Tesla up by 5%, and that bring back Tesla to $207 once again. Alright, so what happened is this: stock closed higher following worst week of 2023. This is very critical information. Major indices are on track to end February with decline. This is even more important because January was okay, pretty positive, and that's why there's a follow through in February. But once mid-February happened, which I've been telling people this, by mid-February there will be some selling, and truth be told, the selling really came. And of course, right now I'm telling you guys this, there will be more selling, especially the first 2 weeks of March. Okay, please put it down. And I believe that there's many good reasons, and I'm not the only one saying that. So of course, the market, why bought, is because there's been some selling recently. It's good for some technical rebound, and to me, it's a bit of conspiracy theory, because if you don't suck in the retail to buy, the market can't sell. So of course, the treasury yields actually ease off a bit because it's been going up quite a fair bit, right? So when it eases off itself, market think that okay, it's time, cool, let's go and buy in. But I tell you guys this: if you know that the inflation is not coming down and the interest rate factors will continue to hike, how can the yield be coming off? It can come off 1 or 2 days on technical. I'm so sorry. I still believe that the 10-year yield will easily see the 5% mark. And of course, in my opinion, by August 2023, we will see a 6% for the Fed fund rate. Alright. So the information is pretty clear that the traders are all looking forward what will happen next. But to me itself, right, investors are all watching the interest rate very closely. And because of this thing here itself, and people have been rotating the funds, and Tesla being was brought up by 5%, right? So what happened to Elon Musk? Yes, indeed, Elon Musk has became the richest person in the world again. Alright, because Tesla rebounded, right? So now Elon Musk is $187 billion worth. Alright, that means that the previous number one spot, right, was the French guy of the luxury bags, is now in second place. So once again, this is how it's been rotating in the rich man world. But still, end of the day, guys, the market, if falls again, it's quite certain to see that Elon Musk may lose the number one spot once again. Alright, so let's have some economic news and data now. At the moment now, interesting, there is a wheat sell-off recently. Alright, recently there's a wheat sell-off, and now it's at the lowest since 2021. The Russian supply are pushing down the futures, okay? Interesting. Record in the wake of Russian invasion, this is where the highest was, and now the pushing has been done, okay? So is it showing that inflation is going down? Maybe. Or is it showing that because the economy is not doing well and then the demand is going down? Well, based on the core durable goods, it's up by 0.7. Now, take note of that. It was 0.1 forecast previous week. Previous one was 0.4 minus. Yet now it's 0.7. So again, this caused that the economy is doing well and it's not tapering off. So what I'm trying to say is this: if the Federal Reserve wanted the whole inflation to go down, right, they need to slow down the economy. But from the way the numbers coming in right now, the CPI data, the PPI data, the PC data, all is going up. And then their core durable goods order still also going up. So that means that, yeah, they may have this soft landing because of the better economy data, but then it means that the interest rate hiking is not producing any impact. And the pending home sales, oh my goodness, up by 8.1%. My goodness, it was down negative. It was 1.1 previously, and then the market was forecasting 1%, but this time around it came up 8 times. My God! So seriously, this is really incredible numbers. So now next for today, it will be the consumer confidence, and of course I expect the number to be 108 to 110. Alright, it should be good. But the thing is this: when it comes to Wednesday and Thursday to Friday, that is where things get interesting, whereby the ISM manufacturing data is going to come out, and of course again, if the numbers are good, that shows that Federal Reserve is not making, is not doing a job well enough. All right, now take note of this, guys. This is something very important. You can see right now, right, the seasonal pattern for March. Usually, S&P 500 will be down. Okay, it'll be down by 1.37%, and that's why I reiterate to you that I see or foresee some selling. Of course, the other one will be gold. Interesting, right? Gold will also be off in the seasonal pattern for March. Okay, so traders take note of that. And euro usually will be upticking. So again, these 3 trades, watch out for that. Now, take a look here itself. This is the Bloomberg Financial Condition Index, and it has been loser since 2022. So again, this actually tells you and speaks for itself that the Federal Reserve is not doing enough. That means that there's still a lot of money in the market, and if that's the case itself, inflation will have a tough time coming down. So let's watch this interview on El-Erian and see what he has to say. Pretty good stuff. Let's go.
30 minutes ago.
Yeah, this is bad news. It's bad news. And it's bad news across the board. It's bad for the economy. It's bad for livelihoods. It's bad for bonds. It's bad for stocks. It is just bad news.
Put it all together for January. Where does it leave this Fed?
Behind yet again, and for the 3rd time in this cycle. I think right now they're going to have a very serious discussion as to not only should they have done 50 last time, which they should they do 50 next? And it's a really tough discussion.
You said going into the last meeting they needed to go 50. You thought they'd go 25. Chairman Powell in that meeting talked about the disinflationary process beginning. Then we all read the minutes. You counted how many times he said disinflation in the news conference. 11, right?
Right.
Then in the minutes, 0.
Right.
What's going on there?
So, I refer back to what you said yesterday, is the question, can they massage, that's the word you use, massage the minutes to reflect subsequent data? I don't know, maybe Mike McKee can tell us, but the minutes were not consistent with the message of the press release. But I think even this word disinflation can't be said anymore. Inflation is heading the wrong way.
So,
all right, so very clear, he is saying very clear stuff. Inflation is really heading the wrong way. Despite all the interest rate hiking, it is not pulling it down fast enough. And in fact, there seems to be some rebound on this. And of course, you really need the Jerome Powell and team to really look at it. If not, things will get very, very scary. Of course, you can watch the whole, you can watch this entire video interview on your own through Bloomberg. Yep. All right, so that is very important, guys. And now the thing is this. Take a look here. Michael Hartnett came in and actually says that, right, look at the, you really need to have the similar thing that what BOJ is doing now. And BOJ is trying its best to lower their YCC, but then you can see that it's moving upwards, right, since the start of 2022. So the thing is this, if this is going to continue, right, Michael Hartnett believed that there's going to be a very big movement coming in, and he still believed that the S&P 500 will drop to 3,800. So where we are right now, S&P 500, this is like, this is the day before. All right, so that is where the S&P now is trading, and let me just take a look at the chart here. Let me just bring it to you right now, live. Okay, the S&P 500 now is trading at 39.82 level, 39.82. So that means that we are still about 180 points away. And if that is the case itself, right, what would it translate to the chart, right? I'll show you in a short moment time. And of course, the interesting thing is this, the global bond round trip, okay? Apparently now, right, the Bloomberg Aggregate Index of the high-grade government and corporate bonds has gone one whole round, okay? This is not a good sign. That means that funds are actually rotating out. And of course, if this happens, you can see right now there is a weekly net flows of US mutual and exchange traded funds that buying dividend paying stock. So why would it be buying dividend paying stock? Because that means that they are preparing for potential downdraft for most counters. Because that means that, right, if they do put money into good use by buying into some this growth stock itself, right, there might be some issue here. So that's why they are now buying into the dividend paying. That means that they are now preparing for something. And this again tells you that this is not a good sign. And because of that, right, you can see right now very clearly that is the peaking bond yield right now, the peaking bond yield, and it's weighing on the value stocks right now. So last year, the strong performance in a cheaper or so-called value stock have grown, and now it's going to reverse soon by JP Morgan. And of course, if this really happened, then of course there will be some profit taking. But of course, for BlackRock Investment Institute, they actually think that it's not. In fact, they reverse the view. They feel that, okay, that the major banks keeping rate higher for long term is actually pretty good. So again, different people have different views. It's up to you to take a look. But to me, it's alright. It's pretty clear that this is not going to be going well. All right. So you can see from here, the equity money market asset ratio shows very clear that whenever we have this particular sign, whereby you can see on the side, when it's at the peak, that's where the market actually peak, and there will be some selling coming soon. So of course, where we see over here, where we are right now, we are coming in, and of course, if this is going to zoom down and goes down to the trigger point, then there should be some selling. Okay, there should be some selling coming in. And of course, on this note here, you can see that the AAII bull ratio, we are now actually back at the bottom. Now, of course, this come say this is contrarian. When there's little bull, that's where the market will bottom. True. But when the thing comes down in such a rapid pace, usually there will be some selling first. So that's the reason why I feel that within the next 2 weeks, there will be some rapid selling. And after that, it's all right. We can try to bottom buy. That's going to be very, very important. Yeah. And of course, now, Evercore, Julian, he's actually having a view right now. He believes that there will be some selling soon. And in fact, he warns that stocks is going to get closer to testing the October low. All right. So again, Emmanuel, let's just hear you out, guys. Okay, let's go, Emmanuel.
Here to that. Let's get to you on the markets at this point. I'm not sure, based on the notes, where exactly you stand. Bearish positioning is neutralized, but you see some of the challenges getting higher and higher for the markets.
So it's an incredibly complex environment. We've said very recently that if you're not confused, you're probably not paying attention. And that is how the market is trading, back and forth between 3,800 and 4,200. From our point of view, this whole idea, however, that you've gone from despair in December when we saw this massive tax loss liquidation to all of those stocks being the leaders in the market, neither narrative is correct. But ultimately, the odds of recession, given the collapse in money supply, given the rollover in leading economic indicators, and given, the 800-pound gorilla in the room,
all right, can you see from here? He says that S&P will likely retest October low in the next 3 to 6 months. Wow, okay. And he says that the Fed tightening in the pipeline hasn't begun to bite. This is very true. That's the reason why you see that the inflation data is going the opposite direction despite what's happening right now.
Curve tell us that we're going to have a recession at some point, and so therefore we see a retest of the October lows at mid-year.
Not before it. And that's the point, right? Like stocks can't retest until you have a recession or until you've begun to price that in.
Well, the fact of the matter is, going back to 1962, you have never had a bear market bottom before the start of the recession. And Ed Hyman's view is that we're going to have a short and shallow recession. And I think part of the narrative in January is we got very happy that the inflation data was calm for that time, and that got people to believe more in the soft landing scenario. But now here we are, and the Fed's going to just keep on going until something either softens or invariably, as it has through most of history, breaks.
I love that statement. It is true, because now Federal Reserve has taken a very soft stand to high interest rate while watching the market. So, of course, if let's say inflation continue to go up or stay stagnant at this point right now, which doesn't going to be helpful at all, then the Federal Reserve will just keep on going, maybe 50 basis point, 25 basis point, 50 basis point, and this is going climbing. And of course, when we keep on climbing, the cost to everyone is still there. And because of that, then there'll be a point whereby something goes soft or something broke. All right. So if you ask me, right, I am very confident that we will see some selling this 2 weeks. All right, guys. So be very careful on this. I'm just giving my view here. Of course, I can be wrong, but if I'm wrong, right, that's well, okay. I apologize in advance. But if I'm right, let's just make some money from the market. Yep. Okay. So that's why Mike Wilson from Morgan Stanley again came out, and on the 27th of February, which is yesterday, all right, says that the bear market will resume. Okay, could resume in March. Okay, and he's very confident. He says that it's on the verge of falling back into a bear market, and March is a high risk month for bear market to resume. Okay, that's very critical. And in fact, right, he says that, right, the market will likely be dropping below the October low, which we'll see very soon. And the stock valuation has risen to thin air. Wow. Okay. So again, very, very heavy stuff. Now, this is the October low back on the 12th of October 2022. And that was where the S&P 500 closed about 3577. The low itself was 3573. So where we are right now, we are at 3982, guys. And if you look at the market, it dropped to 3573. That's a lot. That's 400 points drop here itself. Now, 400 points means how much? Well, basically, mathematically, if you talk about the numbers right now, 400 points times 8.5, because everyone S&P points about 8.5 Dow. That means the Dow Jones must drop by 3,400 points from where we are right now. Wow, okay, that will be incredible. Okay, but again, this is Mike Wilson. He had been calling for sell, and the last time we called for sell back in October, November, the market actually went up. So all I can say is this: everybody may have the timing off wrong in between, but nonetheless, the fundamental can't be too far away. So you look at it, right? He says that, right, the issue is that the earning estimate is way too high, and yes, indeed, everybody is still putting the estimate high and not really reflecting the reality of the earnings and the condition. And of course, in his opinion, that during bear market, the NTM EPS typically flatten out between the quarter earnings and then resume the downtrend. So we are seeing right now is flattening the EPS, and usually that will lead, because why, after a pull out, market thinks that this is the end. But then again, when the boys start to sell, things will go crazy. And the very important thing is this, he added, the S&P 500 is still trading above the 200-day moving average, which is actually the last stand. Indeed, a lot of algorithm, a lot of fund managers, a lot of hedge fund, mutual funds, sovereign funds, they use that 200-day average very, very closely. And I will go into that, and that is going to be very critical for today's video, all right? Now, take a look over here. This is S&P 500 using my 150-day MA. Now, you can see the perfect of this itself, right? When the market last recently touches my 150-day MA, it rebounded there. That's why I feel that this is very good for me. And of course, you can see over here itself, whereby it touches the MA, and then the next day, it plunged, okay? So that was where we called for sell, and well done, guys. So we follow through. And of course, on hindsight, you can see back in May last year, again, that was where the market couldn't go above the MA 150, and that's where it comes off. All right, but again, 150 MA is not what I use. It's not what the Wall Street use. So we use the one that Wall Street use, which is the 200-day moving average. And of course, you look at it right now. Oh my God, the accuracy is also there. Oh my God, look at it. Right, it's almost perfect. It's like almost every time when the market hit the 200-day moving average, and the algorithm would know what to do, and you have to follow through. So of course, on this day, they purposely pump it up above the 200-day MA, and then after that, the market closed below it, and the selling resumed. All right. So recently, back in December, you can see very clearly the market actually got itself supported at the 200-day MA, and that's why we have a move up like this. Okay. Now, the scary part comes already, guys. Now, earlier I told you, right, the 150 AMA, I think is pretty good. And now we put what the market uses, the 200-day moving average. And my goodness, take a look, guys. We have a, what they call a, both of them coming in together, a convergence right now. And this convergence, actually, if you look at it, it actually supported the recent low together. Oh gosh. So which means that if the market, okay, if the market actually loses the low 2 days ago, we have a problem, Houston, right? I believe that things will get very scary. That means that if the market actually goes back down, okay, and goes below the low 2 days ago, I can tell you this, the first stop you'll see is 3,900 for the S&P 500. And of course, the next stop will be easily 3,800, all right? So that's why I'm saying this, guys. Things can get very, very scary right now. You really need to prepare yourself. So what I did is that I actually did the calculation for you. If the S&P 500 really drops to 3,800, so the current price right now, the S&P is at 39.82, and if you look at 3,800 as a target, there'll be 182 points. Now, based on my own mathematics, one S&P point is about 8.5 points of the Dow Jones. Hence, therefore, if 182 points multiplied by 8.5, you get about 1,547. And as of yesterday's closing, the Dow Jones closed at 32,889. So you minus off 1,547, you will actually get this incredible number. That's 31,342. So guys, mark it down somewhere, because I think that that is where the Dow will go down once it loses. Okay, once it loses the moving average. All right, and based on the 31,342, I noticed that that is where the gap is over here. And of course, a big movement of upside. So likelihood the market may break down and come down all the way to here in the next 2 to 3 weeks time. Now, 31,342 is a calculated level. The market can go lower, it can go higher. I'm not too sure, but at least now I dare to tell you this, and you need to take note of that. Yeah, traders, be very, very careful. All right, that will be all for this side, for this video. I will see you guys in the technical side. This is Cal signing off. Bye-bye.